So now we are going to look at input tax apportionment under the UAE VAT law. Article 58 of the UAE VAT law, VAT decree law, and Article 55 of the executive regulation, UAE VAT executive regulations. They require a business to calculate the input tax which may be recovered. Now, if the input tax is paid for goods and services to make supplies that allow recovery, and others are made that do not allow recovery. Why? Because it can happen because of the exempt supplies. So that input VAT, which pertains to exempt supplies, is basically blocked. You cannot recover it. This prescribed method is known as the input tax apportionment, and we are going to look at it in detail. So we have seen that those businesses which supply financial services, uh, they cannot recover input VAT, which relates to such financial services in which there is an implicit, for example, implicit interest rate, which is like made a part of the future value. So in that particular case, this becomes an exempt supply. Uh, there is a situation sometimes a financial service business might have both exempt as well as standard rated supplies. Quite a few banks have that, even insurance companies. So that means this business is partially exempt. So we have to find out how to deal with that input VAT, which can be related to both uh, taxable as well as exempt supplies. So that's a mixed use purpose. Now, Article 55 of the executive regulation, VAT executive regulations, it gives us all the guidelines on how to identify the amounts of that residual input VAT, which relates to both exempt and taxable supplies, on how to apportion it, how to recover it. The input tax, which is either recoverable or non-recoverable in full, which have to be excluded. So non-recoverable has to be excluded, and we cannot put it in the return as recovery. The first step is that the taxable person needs to identify the total value of input VAT, input tax, which is directly attributable to supplies for which VAT may be recovered. So basically, the entire input VAT that we have to divide into three components. First component would be that input VAT which relates entirely to taxable supplies. Uh, that input tax which relates entirely to exempt supplies, and the third group would be tax input VAT that relates to mixed supplies. So let us have a look at it. During any tax period, the total amount of input tax paid for goods and services which are used or intended to be used for making uh, either taxable supplies or supplies that are made outside the UAE, which would have been considered taxable had they been made in the UAE, because for that also we can recover input VAT, and supplies of financial services which would have been treated as exempt if made in the UAE, but which are provided to a person who is outside the UAE at the time of supply, and the services are treated as taking place outside the UAE. That amount of input tax is also recoverable because that would mean a zero rated supply. The taxable person also needs to identify the total value of input tax, which is directly attributable to supplies for which VAT cannot be recovered. So entire input VAT relates to that particular stream of income which is exempt. So that we will not be able to recover. That is straightforward blocked input VAT. Now, input tax on goods and services used wholly to make supplies under Article 54 of the VAT decree law is recoverable. So input tax used wholly to make exempt supplies will be irrecoverable. Let us go through an example because by now it's repeating the various things. There's a guide that was issued by FTA for input tax apportionment. Let's have a look at it. Illustration. ABC is partially exempt. Some of the company's suppliers are standard rated, some are exempt. So let's say taxable suppliers are 400,000 dirhams. Exempt suppliers are only 60,000 dirhams. Now there is 15,000 dirhams worth of input tax that directly relates to taxable supplies. This will be entirely recoverable. There is a 3,000 dirhams worth of input tax that directly relates to exempt supplies that will be entirely blocked. This will have to be expensed out. This is a loss to the company. But then there is a residual input tax, the remaining input tax. The name residual also means remaining. Remaining input tax that relates to both taxable and exempt supplies. Now, this is that VAT, which is a mixed use supply. So this will need to be apportioned. How do we do that? The input tax relating to the taxable business is 15,000 fully recoverable, 3,000 which is for exempt, it is not recoverable. So the residual input tax 5,000. How do we apportion that? We will have to take a ratio. So this was only an example or an illustration of that, the types of input VAT that can be there in the books. Now, there is a method prescribed for that. Article 55 of the executive regulations. It sets out the standard method. What we are about to read is called the standard method of how to apportion residual input tax per tax period. This is the default method. But taxpayers may request the FTA to approve the use of one of the special apportionment methods that is also listed there. We are going to look at those methods later on. Input tax method, the standard method, it's quite easy. Basically, there's a ratio. Recoverable input tax. In our previous example, we saw how much was the recoverable input tax. That was 15,000, right? How much was totally non-recoverable or blocked input tax? That was 3,000. So let us have a look at this. Total recoverable input tax divided by recoverable as well as non-recoverable input VAT. So if you remember that this was 15,000, this was 15,000 plus 3,000. So that is this ratio we will apply to the residual, the mixed use input VAT, which was 5,000 dirhams. So this fraction is expressed as a percentage. And then it is rounded to the nearest whole number. For example, if the calculated percentage is 83.1%, so what we will do is we'll simply round it off to 83%. This percentage is applied to the residual input tax that we saw up there. Note that the input tax which is specifically blocked is excluded from the input tax apportionment calculations. So let us have a same data we are going to apply now. So as we discussed earlier, total input tax which is recoverable, we put it in the numerator, the upper part of the fraction or the ratio, and we divide it by the total recoverable as well as non-recoverable, which is 15,000 plus 3,000. This ratio we are going to take. We see that the ratio is 83.33%. We round it off, it becomes 83%. So 83% of this mixed use residual input VAT that will be recoverable. That we will add to the recoverable input VAT. So if you apply this 83% onto this 5,000, we get 4,150. That 4,150 will relate to taxable supplies, and the remaining 850 will be the exempt part of it. So if you look at again this thing, the 5,000 dirhams of residual input VAT, you'll see 83%, which is the recovery ratio standard method. That will be 4150. This will be recoverable, and the remaining 850, it will be clubbed with this input tax and become the blocked input tax. Consequently, this quarter the business will recover 19,150. How? 15K plus this 415. So 19,150. This will be recoverable input VAT. Now, there is something called annual adjustment. At the end of a VAT year, what happens? The taxable person is required to make two calculations for the VAT year just ended using the whole year's data. So note that the taxable person's VAT year is determined by the registration stagger. Like whenever a business is registered with the Federal Tax Authority, the the authority grants that person the quarterly period, which can differ in which can start from any month, depending on the date of the application. So usually sometimes we call it stagger group, okay? Registration stagger, and maybe different than the calendar year. That's what I just explained. First calculation is an annual wash up, and the second is an actual use adjustment. So let us have a look at first of all the annual wash up calculation. Annual wash up is the same calculation that is used for each tax period. The standard method, but applied to the whole VAT year's data. So like every quarter we had some amount of input tax that was mixed use, right? So we take the full year's mixed use data and we then find out how much we have actually blocked or how much we have recovered. And if there is a difference, we will adjust it. This involves combining all the input tax wholly relating to taxable supplies from all the year's tax periods and comparing this to all input tax wholly relating to exempt supplies or non-business activities for the whole year. And then we take a revised rate. This percentage is then applied to all residual input tax for the VAT year to determine the total input tax recoverable for the year. Probably we are going to have an illustration soon. Let us look at it. Note that the annual wash-up should not be used for error correction. So if there were any errors, we cannot account for those errors within this calculation. The calculation is based on amounts already reported in the tax periods that form part of the entire tax year. Any difference should be adjusted in the first VAT period of its subsequent VAT year. So actual use adjustment after performing the annual wash-up calculation, taxable person is required to calculate the difference between the recoverable input tax per the annual wash-up calculation and the input tax which would be recoverable based on the actual use of the goods and services to which that input tax relates. So what are we doing here? Uh, First we what we did. First step was annual wash-up calculation. Then after that, the taxable person is required to calculate the difference between the recoverable input tax per that calculation that we did and the input tax which would be recoverable based on the actual use of the goods and services to which the input tax relates. So if there is a difference, that will be adjusted. The method used to determine the actual use must be one of the special apportionment methods. So let me see. Yeah, there's an illustration. Let us look at the illustration. It will make more sense. Okay. A taxable person reflected the following in 4 VAT quarters of its VAT year. So in during the quarter one, 2 million was the fully recoverable input tax, and full wholly non-recoverable input tax, which relates to exempt supplies, was 3 million. Residual input tax was also there. This was the mixed use input tax, 10 million. So what in the first quarter, the claimable residual tax percentage was only 40%. Why? Because this was the 2 million was the wholly recoverable. If you add these two, it becomes 5 million. So 2 million over 5 million is equal to 40%. So what we did was residual input tax that we recovered was the sum of 40% of this 10 million, which is uh, 4 million, So that 4 million we had covered. If you look at the second quarter, we had entire 3 million of input tax that relates to taxable supplies. So it was a recoverable input tax. But then exempt was also their supplies. So that input tax which related to exempt was 3 million. And a third data was mixed use. Third input tax was mixed use input tax pool. But we look at the ratio, recovery ratio, so it was equal. So that's why 50% recovery was there. So what we applied this 50% recovery on the total residual mixed use input VAT, and we saw that it was 6 million. So this is how we calculated for all the 4 quarters. The annual wash-up adjustment is calculated as the difference between the recoverable residual input tax during the VAT year. If you look at how much is the actual recoverable residual input tax, that was 14.5 million. That the one that we had claimed in our VAT return. And the recoverable residual input tax per the annual calculation. See, this was something that we actually claimed. But if you look at the overall yearly usage, we will find out. So, because during the year, if you add all the 4 quarters input tax that was recoverable, it becomes 9 million. And when we add the exempt input tax related to exempt supplies, that becomes 18 million. Now let us look and if we added all the mixed use residual input tax, it was 35 million. How much on an annual basis, how much we are able to recover, we have to calculate. If you look at it, so the ratio has to be taken between 9 million and 9 plus 18 million. And so if you, it's one third, we can see easily this is one third, 33%. So we should have claimed only 33% of the full year's residual input tax. But so that would become 11.55 million. But how much did we actually claim during the year? It was 14.5 million. You see this difference? So we overclaimed. We claimed more than that was allowed during the year. So that difference of 2.9 million, difference between this 14.5 and 11.55 million, this difference we overclaimed. So in this instance is an excess amount of input tax recovered during the year, so we have to reverse it. Okay. Uh, this is an illustration that has to be done by the candidate himself or herself. So there are the quarters have been given, 4 quarters are there. Year to date also has been provided. So in the first quarter, that 4 million was there as the taxable, that input tax that relates to taxable supplies. 1,500 was input tax that relates to exempt supplies. And there was a third mixed use input tax was also there. 2.7. If you really take the ratio between these two, we'll have to take the taxable one, which is 4,000, divided by 4,000 plus 1,500. So that is 4,000 divided by 5,500. So if you look at it, I mean, we have to do it ourselves, but that is something that we can easily do. Taxable and exempt, if we add the two, it becomes, here we should write um, 4,000 plus 1,500, 5,500. So the recovery ratio will become 4,000 divided by 5,500. So that will be the recovery ratios. This way all the 4 quarters will come. But at the end of the day, at end of the year, we have to find out the annual recovery ratio also. That is going to give us, the uh, real ratio that we should have applied, and that is going to also give us how much amount of residual input tax we should have claimed. This is an illustration that should be done by the candidate. So using the input tax based standard method, complete the above table that has been asked. So let us go to there are some alternative methods as well that have been provided. The one that we saw up there, that's called the standard method, standard input tax recovery method. Okay. But there can be alternative methods as well. For example, there is an article 55 in the VAT executive regulations of UAE. When it is read with the input tax apportionment guide, state that where a taxable person has been using the standard apportionment method for at least 6 months and considers that it does not accurately reflect the actual use to which the input tax it is put in the business, it may apply to the FTA to authorize the use of an alternative basis of calculation based on a list of accepted mechanisms that have been issued by the FTA. Federal Tax Authority has identified certain accepted mechanisms. A form is provided for application to the FTA, which is submitted through the Imara Tax portal. Detailed guidance on completing the form is included in Appendix 1 of the Input Tax Apportionment Guide. So there is a guide provided on the Amara portal itself, and we can see the how to fill that form. When completing the request form, the following information must be provided: a detailed description of the business activities, the reason for applying for a special input tax apportionment method. But the question should come to our mind: why would a taxpayer go for an alternative method? The common sense answer would be that chances are that if the taxpayer applies the alternative method, they would be able to recover more input tax, right? So that is the rationale. So it's a strategy decision basically regarding the input tax recovery. So any person who wishes to do that has to do first of all calculations internally and find out which is a better method. If you are able to claim input tax more input tax using the standard rate, a standard method, then continue with that. But if applying an alternative method results in higher amount of recovery and that method is approved by the FTA, then it is a good idea to go for the alternative method. Historical calculations of residual input tax apportionment using the standard method. What are we looking at? One these bullet points when completing the request form, the following information has to be provided. So historical calculations also have to be provided of in residual input tax apportionment using the standard method of apportionment as provided in the Article 55 of the VAT Executive Regulations for the preceding 12 months. So during the last 12 months, how we did that, how we applied the standard method. If the taxable person has not conducted business activities for at least 12 months, a shorter period may be used. You could realize within one period or maximum two periods also that, hey, I think this is not giving the true picture. We are at a loss, right? We are not able to claim the higher amount of input VAT. And if we apply the alternative method, we will be in a better position for input tax recovery. Then the taxpayer follows this route. But the fourth information also that FTA requires is the calculation of the residual input tax apportionment for the same period as above, which is the last 12 months, but using a special method for which the applicant is applying, and an alternative method if applicable. So one of the alternative methods is a sectoral method. Let us have a look at it. When the use of a sectoral method is requested, the applicant must provide a special apportionment method for each of the sectors in respect of which the application is made. So, what could be sectors? I think it could be different business segments, you know. So, the different business segments could be dealing in a different manner. If input tax apportionment may be different in case of each sector. If the method is accepted, a taxable person must use the alternative mechanism of apportionment from the tax period following the date of approval, or from any other tax period stipulated by the FTA. So FTA will correspond. They will tell the taxpayer that okay, this alternative method is approved. You can start applying this method from either the next period or whichever period the FTA specifies. FTA requires a full explanation of the reasons why the standard method does not reflect the extent to which goods and services are used in making taxable supplies, and the FTA may request this information from the taxable person as it believes is necessary to determine whether it accepts the application. So FTA will accept or approve application once you have provided all the information, and it is logical. As outlined in the input tax apportionment guide, the FTA will respond within 40 business days to an input tax apportionment request under the method A, B, or C below. So we have different methods. Or 60 business days if a sectoral method is requested. So for sectoral method, slightly longer time. If the FTA accepts the proposed alternative method, it will issue a notification to the taxable person setting out the alternative calculation and the conditions for the continued use of the agreed calculation for the same time periods for the time period which is specified. Let us have a look at the approval granting period. The approval will typically be granted for 4 years in the case of a non-sectoral method and 2 years in the case of, of a sectoral method. So that's something important because if the approval is granted, then after 2 years, we have to probably go back to FTA. The registrant cannot apply to change the approved method for at least 2 years following the approval from the FTA. That's a very critical point for us to remember. For the next 2 years, we cannot go back to FTA again saying that, oh, we did a mistake, the previous method was correct. FTA is not going to allow that. However, the FTA may withdraw approval to use the method for any time if, for example, it considers that the method does not provide an accurate result or withdrawal is necessary for the protection of public revenues. So basically, this is the discretion of FTA to withdraw that approval because the taxpayer was concerned that we did a mistake going with the alternative method. So it is totally the discretion of FTA. Although a registrant is generally not able to apply to change the approved special method for at least 2 years following the approval, it is required to notify the FTA where the result produced over the full VAT year by the input tax apportionment method approved by the FTA differs by more than 10%. Okay, let us read again. Although a registrant is generally not able to apply for change in approval to change the approved special method for 2 years following the approval, it is required to notify the FTA where the result produced over the full VAT year by the input tax apportionment method approved by the FTA differs by more than 10% from the result, the method granted at the time of application. So what is the meaning of this is you if you had used standard rate a standard method, then usual the normal method of creating a ratio between the input tax related to taxable supplies divided by input tax related to taxable and exempt supplies. This is the standard method. Under this method, whatever recoverable tax was appearing, that we have to compare with another thing. What is that other thing? The tax that now is being recovered by the taxable person when they use that alternative method. If because of that alternative method, the difference is 10%, by more than 10%, by more than 10 exceeds 10%, up to 10% you don't need to notify FTA, but if it is more than 10% the difference, then the taxpayer has to notify FTA. The applicant may submit the notification form via the concerned person's Imara tax portal. There's a notification form provided in the Imara tax portal, and that notification form has to be filled and FTA has to be informed. As mentioned above, any method approved by the FTA is valid for either 2 or 4 years, depending on the method. If the registrant wants to continue using a special method after the expiration of the period, a new application is encouraged to be submitted to the FTA at least 40 business days before the expiry of the most recent approved special method. Let us read this point again. As mentioned above, any method approved by the FTA is valid for 2 or 4 years, which we saw 2 years in case of sectoral method, 4 years in case of non-sectoral method. However, depending on the method. However, what happens if the registrant wants to continue using a special method after the expiration of the period, this 2 to 4 year period, a new application is encouraged to be submitted to the FTA at least 40 business days before the expiry of the most recent approved special method. So the last, you know, you applied and it was approved, and later on also you thought, okay, this is not, resulting in the right results, and you went back to FTA. So whichever was the last approval granted by the FTA. So that method will be considered, and after completion of the 2 or 4 years, we have to go back to FTA b- while still 40 business days remain in completion of that 2 years or 4 years. So before that time, we have to notify, we have to go to the FT, and seek approval. Provided the registrant submitted a request to continue using the previously approved special method before the expiry date, the registrant may continue using the previously approved method up to the end of the tax period during which a new decision on the request is issued by the FTA. So if that time period is expiring, so within a tax period, the for that particular tax period, you can continue to apply the approved method. But we need to remember the 40 business day, 40 business days period has we should not never forget about this, that before completion of the 2 or 4 years for which the approval was granted, while there is still 40 business days remaining, we should go back to FTA and remind them that, look, we are using this method. Can you please approve it for another 2 years or 4 years, as the case may be? So, what are those alternative methods for apportioning residual input tax? Uh, One, the outputs based method. To calculate the recovery ratio under this method, one needs to identify the value of taxable supplies as a proportion of all supplies made by the taxable person. So simply, we take the taxable supplies and take the ratio of all other supplies that are made. We should remember that taxable supplies include both standard rated supplies and zero rated supplies versus all the supplies made. That's one. Second, the transaction count method. The number of taxable transactions in a tax period over total number of transactions in that tax period. So that's a very interesting angle. Instead of the money value, monetary value, transaction count can also be utilized to create that recovery ratio for the apportionment of residual input tax. Third method is the floor space method. The floor area used to make taxable supplies over the total floor space. So, this can happen, for example, in production environments, etc., where the factory floor is being used for, manufacturing or producing supplies. And some of those supplies are taxable supplies, others are exempt supplies. But it will be a big question mark as to, I mean, floor space. There are very few types of supplies that have been provided in the UAE VAT law as exempt supplies. If you remember, the like financial services or supply of residential buildings, residential property. So few categories are there. So we'll have to in each case it will differ. So we'll have to see how floor space relates to the business first of all. And then naturally there is sectoral method where business activities are conducted through distinct divisions of a business. So it could be, for example, one thing could be supply of services, another could be supply of goods, Now these are entirely two different things. So sectoral method could apply. So the input tax recovery method for the goods, supply of goods, could be a different method. One could take the standard method for the goods, but one could opt for an alternative method for the services. So sectoral method. And different expenses relate to activities of these different divisions. None of the special apportionment methods may be suitable for apportioning input VAT of the business as a whole. So if these are these scenarios persist, then the taxable person can go to FTA and request that we are going to charge or recover input tax based on sectoral methods to ensure that the apportionment methods are as targeted as possible for each of the discrete business divisions. These businesses may apply for a sectoral method of input tax apportionment, assigning an appropriate method to each division. This might be any of the above methods. In the guide, FTA specifies which types of businesses are eligible to apply for which special apportionment methods. Since the special apportionment methods already consider the actual use of the goods and services, registrants with valid approvals, that is, which are not expired, need not perform an actual use adjustment at the end of its VAT year. So let's have a look at the example two. So uh, in the quarter to 31st March. So that means January, February, March. ZAP had the following. So taxable supplies excluding VAT were 292K and then there were exempt supplies as well. Input tax directly attributable supplies was 7,000. Directly attributable to exempt supplies was also there, which was 4,000. And then there was a residual input VAT, which was 14,000. You are required to calculate the recoverable input tax using the input tax based method. So that's the standard method. That would be an easier calculation. We'll take simply the ratio of these, taxable supply 7,000 divided by 7,000 plus 4,000. That will be the ratio. That ratio we will apply on the 14,000, and it will give us the that amount of recoverable input tax which was lying inside this residual input tax. Another example is there in the quarter to 30th June. That means working back April, May, June. ZIP had the following. So directly attributable taxable supplies are there, directly attributable to non-business activities. These are not even business activities. And we have a residual input VAT as well. So you're required to calculate the recoverable input tax using the input tax based standard method. So these were different situations, these different scenarios. In the next pages, you can see the answers that have been given. It is recommended that you go through these answers and find out whether your understanding is valid, and if there's any questions or anything that comes to your mind, you can reach out to me. Thank you very much.